Welcome back to Explain the Charts, everyone. Today, September 22nd, 2025, we're focusing our in-depth analysis on Intel Corporation, ticker symbol Intel, a semiconductor giant that has been making significant waves in the news cycle. Just days ago, the market was electrified by the announcement of a massive $5 billion investment from Nvidia, coupled with a strategic partnership to co-develop new data center and PC products, sending Intel shares soaring. Adding to this bullish sentiment, Japan's SoftBank also injected $2 billion into Intel, signaling further confidence in the company's future. These landmark partnerships are not the only tailwinds. Intel has also recently secured a historic $8.9 billion investment from the U.S. government, including CHIPS Act grants, reinforcing its position as a critical domestic technology player. Furthermore, Intel has been actively engaged in internal restructuring, including a significant cost-cutting drive and the sale of a majority stake in its Altera business, aimed at improving financial discipline and operational efficiency. Mobileye, Intel's subsidiary, also reported strong Q2 2025 results and raised its full-year guidance, contributing to the overall positive narrative. However, it's not all smooth sailing. Analysts like Travis suggest that despite these catalysts, Intel stock might not be a great buy right now due to its valuation being in line with the market, declining revenues, and lower profit margins compared to peers. Concerns about potential increased H-1B visa fees and ongoing profitability issues also contribute to mixed signals surrounding the stock, indicating a complex market sentiment. Now, let's turn our attention to the charts to see how these news developments have translated into price action and what we can expect next for Intel. Looking at the daily chart for Intel, we can observe the broader historical context, starting from May 2024. After trading in a range mostly between $29 and $32 through May and June of 2024, Intel experienced a notable drop in early August 2024, plummeting from around $30 to a low of $19.29 on August 5th. This sharp decline, accompanied by extremely high volume, likely correlates with the Q2 2025 financial results reported by Intel, which indicated flat year-over-year revenue, GAAP losses, and significant restructuring charges, including workforce reductions. Following this downturn, the stock entered a prolonged period of consolidation and a gradual downtrend, fluctuating between approximately $18.50 and $25 until early 2025. During this period, the $18.50 to $19 zone acted as a strong support, as sellers struggled to push prices consistently lower. In April 2025, Intel briefly hit its 52-week low of $17.665 on April 8th, but swiftly rebounded, indicating strong buying interest at that critical level. From this 52-week low, a new, more aggressive uptrend began to form, pushing the price steadily higher towards the mid-$20s. This long-term trend reversal from the April lows suggests a growing underlying strength, potentially fueled by the market anticipating Intel's strategic shifts and future announcements. Zooming in on the more recent daily candles, the true impact of the latest news becomes strikingly clear. Prior to the major announcements, Intel had been trading relatively calmly around the $24 to $25 mark throughout early September 2025. Then, on September 18, 2025, the stock delivered an explosive gap up, opening at $31.78 and surging to a 52-week high of $32.377, a direct reaction to the game-changing Nvidia investment and partnership news. This monumental daily candle, with its massive body and extremely high volume, confirms the market's initial overwhelmingly bullish response. However, the subsequent day, September 19th, saw a pullback, with the price closing at $29.58 after touching a low of $29.33, indicating that some profit-taking occurred after the initial euphoria. This immediate retracement is a normal reaction to such a significant price jump and suggests the market is now trying to find a new equilibrium. The current price is hovering around $29.655, still significantly above its pre-news levels, but below the recent high. This recent price action has established $32.377 as an immediate strong resistance level, and the pre-spike $24.50 to $25 range now serves as a crucial underlying support. Let's now switch to the 1-hour chart to examine the build-up to the dramatic September 18th event. Looking at the period from September 2nd to September 10th, 2025, we can see Intel trading within a relatively tight range, mostly between $23.70 and $24.70. Volume during this period was consistent but not extraordinary, reflecting a market that was consolidating and perhaps awaiting fresh catalysts. The candlesticks show balanced buying and selling pressure, with no clear dominant trend emerging within this narrow band. This calm before the storm illustrates how swiftly sentiment can shift with significant news, as this quiet accumulation or distribution phase preceded the massive price change. This range also establishes a baseline, which will be important as we consider potential support levels should the stock pull back further from its recent highs. Now, let's dive into the 15-minute chart, specifically focusing on the critical moments of September 18th when the Nvidia news broke. We can see a remarkable surge starting at approximately 10:55 Universal Time Coordinated on September 18th, where a single 15-minute candle jumped from around $25.20 to $31.04, accompanied by an unprecedented volume spike. This explosive move clearly marks the precise moment the market reacted to the news, showcasing an immediate and powerful bullish response. The subsequent candles continued to climb, reaching an intraday high of $32.377 within the next hour and a half, demonstrating sustained buying pressure. However, a reversal began around 13:10 Universal Time Coordinated, with a large red candle dropping from $32.04 to $30.945, indicating significant profit-taking after the initial parabolic move. For the remainder of the day, the price consolidated within the $30 to $31.50 range as bulls and bears battled for control, digesting the news and the rapid price adjustment. The volatility was extreme, with quick swings and heavy volume, highlighting the intense speculation and trading activity surrounding the announcement. This close-up view confirms that the market responded with a textbook, gap and go, but also faced immediate headwinds from profit-takers at elevated levels. Observing these micro-trends on the 15-minute chart is essential for traders looking to enter or exit positions around such high-impact news events. Returning to the daily chart, we assess the current short-term situation and identify key price levels. The current price is approximately $29.65, sitting well above the immediate support level that was the previous resistance around $25 prior to the September 18th jump. The immediate overhead resistance is the recent 52-week high of $32.377, which the stock failed to maintain after the initial breakout. Below the current price, the $29.33 level, representing the low of September 19th, acts as the most immediate support, and a break below this could signal further retracement. Longer-term support can be found near the $20.47 level, the price at which the Trump administration made its substantial investment, making it a psychological and fundamental floor. Reasons to be bullish in the short term include the strong institutional backing from Nvidia, SoftBank, and the U.S. government, which could inspire further investor confidence and potentially lead to more upward momentum if positive developments continue. However, short-term bearish sentiment could stem from the rapid climb being perceived as overextended, inviting more profit-taking, and the Traphis analysis suggesting current valuation is not attractive given ongoing profitability challenges. Traders should monitor volume closely. A return of high buying volume on subsequent upward moves would reinforce bullishness, while sustained high selling volume on downward moves indicates continued pressure. The ability of Intel to consolidate above $29 and eventually challenge the $32.377 resistance will be crucial for confirming a sustained upward trend. For swing traders, observing candlestick patterns on the 1-hour chart during daily trading hours will provide valuable entry and exit signals, especially around the identified support and resistance zones. To recap, Intel has seen explosive growth fueled by major strategic investments and government support, but it's now navigating a period of consolidation and potential volatility. The most important price levels to watch are the recent 52-week high of $32.377 as strong resistance and the $29.33 level as immediate support. Further down, the $25 pre-spike level and the $20.47 Trump investment price act as significant longer-term support zones. Our unbiased short-term prediction is a 60% likelihood of consolidation in the $29 to $31 range in the coming days as the market digests the news and profit-taking subsides, with stable volume and smaller candle bodies reinforcing this. There's a 30% likelihood that Intel could retest and break past $32.377 within weeks, requiring further positive news on partnerships or strong semiconductor market performance, indicated by high volume on upward movements. Conversely, a deeper pullback to the $25 support has a 10% likelihood, which would occur if the recent gains are deemed unsustainable or if negative news regarding Intel's challenges resurfaces. Watch for high selling volume and a decisive break below $29.33. Long-term, Intel's strategic foundational investments and renewed focus on foundry strategy offer a bullish outlook, with potential to push beyond current highs towards the $60 target mentioned by some, provided they execute on their new initiatives. However, investors must remain vigilant for updates on profitability, revenue growth, and any impacts from H-1B visa fees, as these factors could influence the long-term trajectory. Always remember to correlate chart data with fundamental news, manage your risk appropriately, and consider multiple timeframes before making any trading decisions. Thank you for joining Explain the Charts for this deep dive into Intel today. We'll be back soon with more analyses.